Hello everybody, welcome to another one of my investing videos. My name is Mark, and in this video we are going to continue talking about Twitter. And in this video we are going to talk about, is it really possible to predict what is the price of a stock going to do? And this right here is a 1 month chart on the price of Twitter. It is a visual representation of what Twitter has been doing the last 30 days. Okay, now if you've been watching my videos, then you know that about a week ago I did a video where I analyzed Twitter and I drew a line like this. And this today is October the 4th, 2018, and this would be about a week ago, September the 25th. I think that's when I did the last video, and I drew a line like that, and I drew a line at the bottom like this. And the top line is the resistance and the bottom line is the support. Now, moving on, you'll notice that if we continue our lines and we keep drawing down like this, you'll notice that the price went outside of the line like that. That's called a breakout. Okay. Now the question is the breakout, is there any substance to it, or is it a false breakout, and will it go back under the line back into this range here? Let me close this out and move it down. And that's the question. And this breakout happened on the 26th, and then it went down, and it tried to go back in the range, but then it broke up. And as of yesterday on the market, when the market closed, it closed at 29. So it looks like that the breakout is the real deal, and I can say with a at least minimal level of confidence that Twitter's downslide is coming to an end. Okay, so now we can get rid of all of this, because this pattern here is no longer valid. Okay, this pattern right here that you see, and I apologize for the ads. I really need to probably pay the monthly fee, given how much I do this charting stuff and how much I really like tradingview.com. But sorry for the ads. But given this pattern here, this pattern is no longer valid. Okay, and so we can no longer predict what Twitter is going to do based on this pattern. So we can get rid of all of this, and we can start our new pattern right here. So let's get rid of all that, and let's draw a new pattern starting from that point. So here is the point right here, and we can draw a line like this, and that's only 2 reference points. And then we can draw a line like this. Let's try that again. And that would be a new pattern. So the old pattern, let me move the chart back over. This old pattern is no longer valid. And now we have a new pattern. So it looks like Twitter is finally finding a bottom, and we can make predictions based on this new pattern. Now if you'll notice, right over here on the right you see pre-market 28.84. so I predict, based on this new pattern, okay, notice that Twitter goes up and down in these ranges, right? Based on this new pattern right here, right, that's our upper line there, this is our lower line. Based on this new pattern, hold on, let me bring that back. Based on this new pattern, I predict that in the next day or two, Twitter is going to go back down to here, and then it will go up again. So if I was a day trader, I'm going to wait for a day or maybe 2 days for Twitter to go back down to this level right here, and then I would put in a buy order, and I would buy Twitter at about 20 $28 a share. And then I would put in my stop loss, maybe a 2% stop. General rule is you don't want to risk more than 2% of your account. So depending upon how much money I have would depend upon where to set my stop loss. So I would probably set my stop loss maybe down here somewhere, maybe at $27.50, and then I would put in a limit order up here somewhere, maybe at $28.75. So I'm risking 50 cents a share, hoping to make 75 cents a share. Hopefully I would have enough money to be able to buy 200 shares so that I can make $150, and if I'm wrong, lose $100. That's called risk-reward ratio. I'm risking $100 trying to make $150. And so based on these patterns, I am predicting in the next 2 days that Twitter will go back down and then it will go up just like it's been doing. And these channels, this is, by the way, this is called a channel. This range right here, when there's an upper limit and a lower limit, that's a channel, and that's a channel. Okay, these channels are always going to shift around. Okay, but the basic behavior of this particular stock it is very common. It just goes up and down in these ranges in the short term. Now when the earnings comes, and earnings season is on earnings is for Twitter is on October the 25th, and you can just throw all this out the window. All of this is going to go out the window because Twitter is going to go up or down like gangbusters. If you look at this, this is the last earnings, okay? And Twitter went down, it plummeted like a rock, and that's because it had a bad earnings, and it went down all the way from $35 almost all the way down to where you see it now. It's been trending down ever since at $29. So that's like a almost 20% drop in the price. So you can forget about these patterns on October the 25th. But in the meantime, yes, you can predict with some accuracy what the price of Twitter might do based on these patterns. Okay, so in the next 2 days, I predict Twitter will go back down, get near $28, and then it will go up and it will stay in this range. And at some point there's going to be a breakout. It's either going to break above the resistance or it's going to go below the support. And you can totally buy and sell stocks or options or whatever you want to do, whatever suits your fancy, floats your boat, based on these patterns. Trading is all about patterns. Whenever somebody goes on the internet and says, let me teach you how to be a millionaire, try my secret system, I guarantee you they're going to tell you some particular pattern, or maybe multiple patterns that they use, that they say will predict the stock will go up or down. All trading, day trading, swing trading, or whatever is based on patterns, no exceptions, 100% of the time. And people will put in their buy orders, their limit orders, their stop losses, their entries, and their exits based on these patterns. Okay, patterns are not crystal balls. Okay, nobody can say, I cannot say I know that Twitter will go back down. Maybe it'll keep going up. But if I look at the pre-market, okay, Twitter closed at $29 and a penny, and now in the pre-market, Twitter is already going down, true to this pattern. Okay, but that does not guarantee that this will always happen. As you saw, breakouts can and will happen. That's the nature of this game. So yes, you can predict what stocks are going to do if you get good at being able to draw patterns and being able to, let me delete all this out and let me redraw the pattern so there's not all that nonsense. And let me draw the lower line. If you get good at being able to see stuff like this and then drawing new patterns based on those breaks, then you can be a profitable trader. This is not rocket science. If you've been watching my videos, I've been doing videos for quite a while now. You know that I'm just an average Joe. I'm just a regular 9-to-5 kind of a guy. I have a little bit of money and I enjoy the heck out of what I do. And I do make a little bit of money. No, I don't make thousands of dollars every day. I don't make hundreds of dollars every day or every week. I'm not going to lie to everybody and say that I am always right and I am perfect, okay? I leave that up to the other people that try to sell you stuff. I'm just a regular guy that has a little bit of money and I enjoy this. So, yes, you can predict what the price of a stock is going to do if you get good at drawing these patterns and you get good at spotting these kind of things. When you see a break and then you see new patterns. Trading, investing is all about patterns. Thank you for watching this video. If you have any questions, as always, feel free to leave a comment. I will see you in the next video.